Hey everyone, welcome to our Acctivate webinar featuring how to find true cost of goods sold using landed cost. My name is Eva Reese and I'm the Client Solution Specialist here at Acctivate. So let's go ahead and get started. Alright, so we're going to talk about the following topics. What is landed cost? When do I use it? And what does it look like posted to QuickBooks? Alright, so what is landed cost? Landed cost is the process of capturing additional costs used to bring the products into your inventory or costs to get your products ready for sale. The addition of these costs in Acctivate will enable your business to know your true cost of goods sold. Instead of posting these additional costs to an expense account or directly to the cost of goods sold account in QuickBooks, Acctivate will post them to your asset account until you sell the actual goods themselves. This will allow you to more clearly see your true margins as you sell your products. So what kind of costs are we really talking about though? It can be any additional cost incurred that relates directly to your products before the time of the sale. I've listed a few examples here that we see landed cost used most often here at Acctivate. So freight costs could either be from the direct vendor on the PO invoice that you receive, or they can be from a third-party shipping company. Either way, we can apply the cost to those freight charges across the products affected. If you purchase from overseas or across a border, you may receive bills for customs fees or taxes. We'll be able to apply the cost of those bills directly to the products that we brought in. And then some companies utilizing Acctivate will utilize co-packers or subcontract manufacturing. Those fees incurred in that process can be allocated directly to the products on one or multiple assembly sessions within Acctivate. And when you have multiple warehouses that are not physically close to one another and you need to move product from one facility to another, that cost of transportation can be allocated to the products being moved. So the gas for the truck or the wage of the courier, for instance, those would be transportation costs. And these costs may or may not be known at the time of the posting of the original entry. So I may not know that what my shipping cost is going to be when I post the receipt for the actual goods. Even if I don't get the third-party shipping company's bill until the end of the month, we can still post that transaction as a landed cost entry. And the landed cost will post as of the same date as the original transaction that we're relating it to. And I'll show you an example of this in our demo portion of our webinar. Alright, so here's an example of what landed cost is in case you're still a little lost. So I'm purchasing 100 pairs of sunglasses from overseas. They cost me $1,000, and so their unit cost is $10 each. But I've also received charges for freight at $100, duties at $60, and I insured the shipment for $40. So that extra $200 in cost needs to be taken into account. So I'll add that cost to the original cost of $1,000 and divide that by 100 pairs. Now my true cost of goods sold is $12 each. If I had not known what my true cost was, I may have sold the glasses for too little and not made the full amount of anticipated profit. So now we'll go over what this looks like on the accounting side in QuickBooks. Alright, so this is going to show the flow of how landed cost is posted to your general ledger. This is the same process whether the cost is included on the PO invoice or billed from another vendor. So first, Acctivate will post the landed cost journal entry to the asset account and the accrued landed cost account associated with that warehouse. If you check the box on the landed cost section, and I'll show you where that is, to create the vendor bill, Then we will create that vendor bill against the accrued landed cost account and your accounts payable. After running a sync to QuickBooks to bring these into your QuickBooks, you would then be able to cut the check for that bill and close out the liability itself. The transaction date of the landed cost entry into your general ledger will depend on the cost method of the items. So the vendor bill will be posted to QuickBooks as of the date listed on the document. So if it was an invoice for the first of the month, that's when the bill would be posted as of. But if you're using cost methods of FIFO or LIFO, Acctivate will post the additional costs in the inventory asset account directly to the layer associated to the transaction that you're linking that landed cost transaction to. Average costing your items means that Acctivate will allocate the full value of the cost as of the date of the original receipt, assembly, or transfer session, but it's going to be divided across all products in the warehouse at that time. Lot or serial numbered products using actual cost will have Acctivate apply the cost directly to the lot or serial numbers of the original transactions. And you'll actually see the proper lot and serial numbers in the landed cost transaction itself, so you know which ones are going to be affected. When we talk about a landed cost transaction in Acctivate, we're going to refer to loading items and allocating the costs. So loading items refers to the original transaction that you want to relate the additional costs to. So you can load receipts. You can load receipts from specific POs, inventory transfer sessions, or inventory assembly sessions. These loaded transactions would be selected based on the type of added cost you're needing to enter. If I'm entering a freight charge from my vendor, I would use receipts from PO. If I'm entering a co-packing fee, I would load the associated assembly sessions, and so on. You are also able to add products not related to a specific transaction, and I'll show you kind of how that works once we get into the demo itself. But in that case, the session date is very important because that will be the post as of date for that transaction. This method would mainly be used by companies that house their products maybe at a 3PL, or when you have some overhead cost that you want to apply to all items or a section of items that aren't necessarily related to an inventory session. In that case, we're going to bring in the total quantity of the items for that warehouse for the cost to be applied to. So once the items are loaded, we need to allocate the cost across those items themselves. So if you only have one item listed on the landed cost after loading my sessions, Acctivate's going to allocate the full cost of that bill to that one item. But most of the time you're going to be allocating the cost across multiple lines. To allocate those costs, you can select one of the methods of allocation and have Acctivate do most of the work for you. So the methods of allocation are quantity, value, weight, and volume. So if you're landing a freight cost, you're most likely going to want to allocate the costs to the heaviest items first, or those with the greatest volume measurement if they're doing dimensional weight. Because those items cost more to ship, you want to make sure that the weight is actually attributed to those most. If you don't have your item weights in Acctivate, you would need to add those in order to utilize that method. I also have the landed cost factor listed as a method of allocation. This method, though, is one that you wouldn't be able to select at the time of creating the landed cost session. The landed cost factor is entered on the product window ahead of time, and it's used in the event that a certain item takes up the majority of the additional cost. So this factor is a multiplier for the product that can be used to change the item on the landed cost window or get more than the normal share. So if you have an item that maybe is a higher value item that you want to definitely make sure that it gets more of its allocated customs fees or something, you would use landed cost factor to do that. And I'll show you what we're talking about there once we get into the demo. So let's go ahead and do that now. So I'm going to start by showing the most common way that I see companies use landed cost, and that's with the additional fees on a vendor bill. So I'm going to open up a purchase order. And this purchase order has already been received, and now I'm just going to be creating my invoice for this PO. So I'm going to put in their invoice number and the invoice date, and then they're not just charging me $11,755, they're actually charging me an additional handling fee as well. So on the other amounts tab is actually where I'm going to enter that fee. So I'll put handling as the description, put in the amount of $50, and choose landed cost. All right, now I have $50 that I need to allocate across these items. So I have a few different items here, and I need to allocate it by the quantity, the value, the weight, or the volume. So since it's a handling fee, I'm probably going to allocate this fee specifically across the items according to the weight of the items themselves. And that's because you're going to be paying more for those heavier items. So when I hit weight, you'll see that the Colombian beans actually get 89% of the $50, so that's $44.57 are going to be allocated to the Colombian coffee beans because their weight is so much higher than the other products. So I'll post this landed cost transaction. And I could go back to the purchase invoice and finish them out, right? And now I have a total of $11,805 instead of $755. Okay. So now let's say that I also got a shipping fee from a third-party shipper. I'm going to go into landed cost, hit new, choose the vendor that's charging me, in this case American Delivery Services. I'm going to put in their invoice number and their invoice total. I'm also going to give it a description to show kind of what it is. And then I'm going to load items. So I'm actually going to load items from that specific PO, and that was PO 1257. So this is the same receipt that we allocated that $50 handling fee to. So you can definitely allocate more than one landed cost transaction to an item or to a particular session receipt. So now I can choose how I want to allocate the $200 across the item. So I can do it the same way as I did with the other one, where I can allocate it based on the weight, and $178 of the $200 would be allocated to the Colombian beans. I could even go in here and override it and type in 75 and put in my own amount. I will see a discrepancy here to show what's left over that I still need to allocate to one of these items. So for our example here, I'm going to show how Acctivate is going to allocate the cost of our shipping based on the value of the items. So we'll hit allocate by value, and now we have 49% of the $200 is going to our Colombian coffee beans, whereas 40% is going to our buttons. And that's because they have the highest unit cost with the highest quantity, so the highest value. If I allocate it based on the quantity, you'll see that the tables have turned, and now the button has the highest allocation percentage out of them all. You'll notice here that the quantity of the Colombian beans and the quantity of the label are the same. So why is the allocation percentage different? And that is because our label has an allocation, or landed cost factor, sorry, of 2. So essentially, it is doubling its original allocation. So instead of allocating it based on a quantity of 5,500, it's an allocation percentage of 29%. So there's definitely a few different ways to allocate your fees, but I like to point out that for a shipping cost, the weight or the volume would probably make the most sense, because that's why you're paying more, is because those things weigh more. So if I were to post this transaction now and run a sync with QuickBooks, Acctivate would create a new vendor bill for American Delivery, because I have this create bill selected. It's also going to create a journal entry for the values of the items against the asset account of my F warehouse. So what would happen if I were to change the landed cost factor to 0? So let's go to button, and we're going to change our landed cost factor to 0 on this product. And since I changed that, I need to now back out of the transaction or create a new one to show that change was done. We'll load items from that PO again. And then now, when I hit and put in the 200, allocate by quantity, instead of the 54% that we saw for button before, now it's allocating 0. And that's because I've told Acctivate I don't want to attribute any landed cost to this item ever. So the landed cost factor is definitely something that is in all or nothing. I can't change that on the fly for each individual landed cost session. If I do need to do it where I need to change it on the fly, I would leave my landed cost factor as 1, because that is the default for all products. And then I would have Acctivate allocate based on, whatever factor I want to use, or whatever method I want to use, really. And then I can change the percentage out based on the session itself. So instead of using landed cost factors for one-off changes, I would just change it manually myself. All right, so let's talk a little bit about adding these additional costs to assembly transactions and to transfer transactions. Let me close out of these. All right, so we will hit new session, and let's say that Babybel is our co-packer, and they are invoicing us for some processing that they did to actually package our items. So they're giving us a bill for $150, and we're going to load items from assemblies. So I have 2 assembly sessions here. The last one is just for the French coffee, and if this is the only thing that they did for a quantity of 50, then I could just leave it. But I can also load additional assemblies as well. And since an assembly transaction is for one product at a time, it could be different quantities. You will have to load them in if it's more than one product that they've done. So in this case, they're both French coffee, French roast coffee, but different quantities and different unit costs for sure. So now I can hit allocate by the value, and we'll get the 98% on the F warehouse. And you'll notice that these are 2 different warehouses, so we can definitely post 2 different warehouses on this. And when I hit post for these transactions, and then I go and look at the product, premium French roast coffee, and go to my transactions, you'll see the landed cost right here and the assembly session right there. If we are doing it for the F warehouse, you'll see that as well. So we did an assembly on 9/12, And since we posted both in one session, we can only choose one transaction date per session for landed cost. So this is another thing to point out. If you are doing this across multiple different transactions or different sessions, different receipts, different assemblies, you will need to be cognizant of the dates of those particular transactions, because you'll notice that our D warehouse has the landed cost posted as of 9/12, and there wasn't even an assembly done yet. There wasn't anything done in this warehouse yet. So we just had a value of 189 floating out there. In reality, I would have probably split out the landed cost session into two and had Acctivate not create the vendor bill for the vendor, and instead I would create the vendor bill in QuickBooks, so I only have one vendor bill, but I have two journal entries with two different dates for landed cost. And the accounting on that would be, when I create that vendor bill, I just need to pull from my accrued landed cost GL account at that time, and it would clear out of that account, just like when we pull from accrued purchase receipts for receipts. All right, so that's assemblies. Transfer sessions are pretty much the same, but you may not have a vendor. So we transferred items from D to F or vice versa, and we're going to load items from that inventory transfer. And here are all of our items. You will notice that this particular product has a serial number on it, and so we are attributing this cost that we're going to add directly to this serial number. So we'll put in what we want to actually add in. So let's say it cost me $50 to transport all of these items from warehouse D to warehouse F. And you'll notice that the warehouse here is notated as D, because we only need to add the cost in once. And since Acctivate utilizes COGS roll forward, we're going to add it in the D warehouse, so that way it will roll forward to the F warehouse as well. So then we'll allocate this by, and I'm going to do it by the value, just to show you that one. And we've got 61% going to the laminating machine. All right, we will post this. And again, remember, this is going to post a journal entry against your asset account and your accrued landed cost. So you will need to clear that out against, payroll if you're paying somebody for this, or an expense for gas. So now if we look at any of those products, let's say PC20, it is serial numbered and actual costed, and we have warehouse D has 6 at $38 average cost, but average cost in this product doesn't really matter. It's just simply for us to see it. We'll go to transactions, and we will see the landed cost session for both serial numbers here. And we've got the transfer session as well. And then if I wanted to see what the actual value of the serial numbers was at this time, I would go in here and see that the unit cost is now $63.37. And that has followed it through to warehouse F. And yeah. So that's about all I have for landed cost. I know this can be a complex topic, so I wanted to leave plenty of time for questions if you guys had any. So go ahead and send in your questions, and I'll answer them best I can. So we had one question about the landed cost entry, increasing the asset account. And the answer is yes, we will be increasing the inventory asset account. Let me pull up that PowerPoint slide again to show you. Okay, so the accounting impact is we will be increasing your inventory asset account, and we're also going to be posting, so the other side of that journal entry is the accrued landed cost. So when you actually look at your products, that French roast coffee that we were adding for the assembly, we now have a landed cost, and I'll show you on the other one. Our true cost is not just the $165 each. It is adding in that cost, and our new average cost is $167 instead of $165. This is a great question. So what if the added costs, landed costs are not added until after the item that they apply to has been sold? Great question. We will still be adding them. And what that means is that this is why we utilize that transaction date. So let's say that I had another transaction in here as of 10/1 that I sold it. I would still be posting my landed cost, and Acctivate would do this automatically based on the transactions utilized as of 9/12. So this is why it's so important to keep your accounting books open until all bills have been received. So if you still have bills that you're expecting from a shipping company or anything like that, you would want to keep your accounting transaction period open until you get those items, and then you can backdate that posting essentially to add that in. And it will automatically update your cost of goods sold for that particular sale to be based on the new landed cost of the item itself. So this is a good question for FedEx, for example. Can you enter the invoice, the bill from FedEx, over several customers' invoices? This is really something that's not included in landed cost as customer invoices. We're talking about landed cost as a way to bring in my products, so freight in, or any additional costs that my products incur, such as that added cost for storage, things like that, before the time of the sale. So once the product is sold, I'm no longer utilizing added cost. At that point, or landed cost, at that point, then it just becomes a simple accounting transaction, and I just attribute those in QuickBooks themselves to a sales cost of sales account, not a cost of goods sold account. I hope that answers your question on that one. But if you get a bill from FedEx for your vendors that are sending you products to your warehouse or to one of your warehouses, then definitely we will utilize landed cost for that. So this is a good question. Will these additional invoices need to be posted again in QuickBooks? I'm going to open this up. This create bill, check mark, will actually create the bill in QuickBooks for me when I sync to QuickBooks. So once I run a sync to QuickBooks, that bill that I've created with landed cost will be created as a vendor bill in QuickBooks. Then all I have to do in QuickBooks is cut the check. If I don't check this, then yes, you will need to do that. So we get partial shipments for our POs. How does landed cost work with partial shipments, or one shipment with 2 to 3 partially shipped POs? And that's where you load items related to a receipt or receipts from PO. So this is why we allow you to load in multiple. So if I load in this one, I can also load in this other PO. And that's only in the event that both of them were shipped at the same time, and or in a similar manner, and I need to pay for them in one fell swoop. So the question is, what if the FedEx bill has both customer shipments and vendor shipments? In that case, I would need to, outside of Acctivate, determine what is a vendor shipment and what's a customer shipment. I would take the total of the vendor shipment, put that into the invoice total here, and then I'm not going to create the bill. What this would be is essentially I'm just going to be entering the bill into QuickBooks manually for the full charge of the customer shipments and the vendor shipments, and I'm only allocating the portion that's actually related to the vendor shipments in Acctivate to the items. So if you don't want to allocate the landed cost to a particular item, you can just delete the item from the landed cost transaction. It's going to attribute it to only these. And in the event that you only want to attribute it to part of a receipt and not the full, I would delete that line. So let's say that label 10, I only want to do 1,200 of it. I would delete that line and then go on to here, add label 10, and then I can choose the quantity here. Or I would be able to utilize the entire quantity of the warehouse, because I don't think I have anything in warehouse D right now. No. Okay. So yeah, when you're doing partial shipments or partially shipping things, you won't see that because you're doing a receipt every time you actually physically receive items. And if it's a separate shipment, you're going to have a separate receipt for it. And so I would load items from that particular receipt. So this is a follow-up on the FedEx question when we're receiving a bill from FedEx for both vendor shipments and customer shipments. And they're asking, if the vendor shipment portion is across multiple POs, do you do a transaction for each PO that matches the cost of that PO? And I would say no. You would just pull in all the receipts from multiple POs. So if you're doing, let me see. Yeah, so if you wanted to add in another PO in here and attribute it across all of those, you could definitely do that. You could split it out if you need to. Now here's a question. We're talking a lot about shipping, but here's another one that's not shipping. So are tariffs considered landed costs? This is ultimately a question to ask your accountant how they want you to do it, but typically they would answer yes. This is a landed cost. This is something that you want to attribute directly to the items that you're receiving into your warehouse. This is a cost that is related to bringing them into your warehouse to sell. So yes, I would definitely say tariffs could be landed cost. And in those cases, tariffs have different weights based on the types of items. So I would definitely say the allocation percentage and the ability to type that in yourself is going to come into play more with tariffs than with anything else. So this is a really great question, and I'm glad that somebody asked it, because I probably would have forgot to mention it. But you can't land the cost of shipping to an item that's not in your product list. Such as a one-off miscellaneous item or to a non-inventoried item. And that's because Activate's not keeping track of that cost. So where would you see it is the question. So if it's a non-inventoried item, I'm not using any costing within Activate. Non-inventoried items only attribute directly to cost of goods sold. In that case, if I want to kind of attribute a cost to a non-inventoried item, I would just do a journal entry in QuickBooks to take it and put it to my cost of goods sold account, instead of having to worry about making it an inventoried item and things like that. But ultimately, if you want to keep track of costs, it should be an inventoried item, so that way you're keeping track of quantity as well. This is a good question. So going back to landed costs being added to the inventory asset account, my example automatically assigned a landed cost to the expense account accrued landed cost. Is that required? Can it be assigned elsewhere? The answer is technically yes, but I would not go that way. Accrued landed cost is a suspense account. It's a clearing account. You're going to need to have something to kind of segment this out from your regular products. And with that, we're definitely wanting to make sure that you're putting it to the correct account in general. Accrued landed cost is just a holding account. So I don't even know what account you would put it to other than this. This is a good question. So they're talking about artwork or design fees as landed cost. And their question is, let's say that we do the artwork in May, but the item isn't made or brought into the warehouse until October. Can we go back to that old invoice and assign the artwork fee as a landed cost? That That's a very specific question. I may need to, elaborate a little bit more in a further discussion on this, or you can talk to support about this fully. But it sounds like, typically I do say that artwork and design fees are landed cost because those are attributed to bringing the item into your warehouse. You're having to do something to actually produce the item. It's research and development essentially, right? So you need to attribute that to the cost. But going back to May and going into May to October, that's a little bit of a different situation where your accountant may need to step in and see if you're putting it in the invoice in May. You may put that invoice to the accrued landed cost account in May, so that way you know that landed cost is coming. So I'll give you guys a couple more minutes to ask any last minute questions, and then we'll kind of sign off on this. So the question is, how can I get a link to this recorded webinar? And I will be posting this webinar as soon as I get the chance to edit it and make sure there's no issues in it, and posted. Should be about next week, but with the holiday it may be beginning of December. And that link will be on our webinars page on the help site. So if you go to help.activate.com/webinars, you'll find it there. All right, so I think that's it for today's webinar on finding your true cost of goods sold with landed cost. We'll see you next time. Have a great day.